Hello everyone and welcome back to Boni's Life. Today we're diving deep into the turbulent waters of the crypto market. There's a lot of fear and uncertainty out there right now, so let's break down what's happening and what could happen next. The global crypto market cap is sitting at around $3.21 trillion, which is a slight 0.4% increase in the last 24 hours. However, the 24-hour trading volume is a hefty $191 billion, and we've seen a significant amount of liquidations, totaling over $744 million in the last day. This tells us there's a lot of volatility and forced selling in the market. Bitcoin is currently trading around $91,800, up a mere 0.5% in the last 24 hours, while Ethereum is at about $3,018, showing a bit more strength with a 2.2% gain. But don't let these small green numbers fool you. The Fear and Greed Index is currently at 10, which is in the extreme fear territory. This level of fear hasn't been seen in a while, and it's a clear indicator of the panic selling that has been taking place. Now let's talk about the three potential scenarios that could play out in the coming days and weeks. Scenario 1, the bullish reversal. This is the scenario all the bulls are hoping for. The core idea here is that the market is currently oversold. The extreme fear reading on the Fear and Greed Index often precedes a market bottom. The massive liquidations we've seen could have washed out the weak hands, leaving the market primed for a recovery. Furthermore, there's a macroeconomic factor at play. Some analysts believe that the recent market downturn is linked to a broader liquidity crunch. If the Federal Reserve decides to step in and inject liquidity into the system as they have done in the past, a significant portion of that new money could find its way into the crypto market, pushing prices higher. For this scenario to play out, we need to see Bitcoin hold its current support level around the $88,000 to $90,000 mark. A strong bounce from this level, accompanied by an increase in open interest and a shift to positive funding rates, would be a strong bullish signal. In this case, a good trading strategy would be to look for buying opportunities on dips, while setting a tight stop loss below the key support level. Scenario 2, the crypto winter. Now for the bearish scenario, the one that keeps many of us up at night. This is the crypto winter scenario, where we could see a prolonged period of declining prices, similar to what we experienced in 2018. The recent 28% drop from the all-time high of $126,000 is significant, and some analysts like those at Forbes are suggesting that a true Bitcoin crash could see prices fall by more than 50%. This would mean a Bitcoin price of around $60,000 or even lower. The data from CoinGlass shows a decrease in open interest and significant outflows from Bitcoin spot ETFs in the past few days, which supports this bearish outlook. A decisive break below the $88,000 support level could trigger a cascade of liquidations, sending prices spiraling downwards. If this scenario unfolds, the best strategy would be to take profits on any existing long positions and move to the safety of stablecoins. For the more experienced traders, short selling on any rallies could be a profitable strategy. The key technical trigger to watch for is a sustained break below the $88,000 support level. Scenario 3, the sideways grind. Finally, we have the most boring, yet perhaps the most likely scenario in the short term, the sideways grind. In this scenario, the market remains caught between the bullish and bearish forces. The bulls are hoping for a Fed pivot, while the bears are pointing to the weak technicals and the recent price drop. This could lead to a period of consolidation where Bitcoin and the rest of the crypto market trade within a defined range. We might see Bitcoin bounce between $88,000 and $95,000 for a while, with declining volume and flat open interest. This would be a period of indecision where the market waits for a clear catalyst to push it in one direction or the other. For traders, this scenario offers two main strategies. The first is range trading, buying at the bottom of the range and selling at the top. The second is to simply wait on the sidelines until a clear breakout occurs. This is often the most prudent approach, as it prevents you from getting chopped up in a directionless market. So, there you have it, three potential scenarios for the crypto market: the bullish reversal, the crypto winter, and the sideways grind. Each of these scenarios is plausible, and the one that plays out will depend on a combination of technical factors, macroeconomic events, and overall market sentiment. As always, this is not financial advice. It's crucial to do your own research and make informed decisions based on your own risk tolerance. The crypto market is a wild and unpredictable place, so always be prepared for the unexpected. Thanks for tuning in to Boni's Life. Don't forget to like, subscribe, and hit that notification bell to stay updated on our latest content. Until next time, stay safe and trade smart in profit.